Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of the financial maze and reveal the secrets big companies try to hide. And today we're diving into a filing that is all about extending deadlines and a bit of a reshuffle. So what we've got here is a current report, basically a quick update from Trailblazer Merger Corporation. It is not packed with tons of new financial performance data like a quarterly earnings report would be, but it tells us about some pretty important decisions made by the company's leaders and shareholders. Think of it less like a full financial checkup and more like a status update on key company operations. And importantly, if you appreciate getting straight, no fluff insights from these corporate filings, make sure you hit that subscribe button. We also have a Discord community linked in the description below where we discuss these things in real time. The main event here happened on the 29th of September 2025. This is a special date because it is when the company held its annual meeting of stockholders. Now, what prompts such a report is usually a significant change or event, and for a company like Trailblazer, which is often involved in mergers or acquisitions, extending deadlines is a pretty big deal. This is Trailblazer Merger Corporation I, a company incorporated in Delaware. They're in the business of merging. Specifically, they seem to be a special purpose acquisition company, or SPAC. These companies are formed to raise capital through an IPO and then use that money to acquire an existing private company, effectively taking it public. So, their whole existence revolves around finding and executing such a deal. Their publicly traded securities include common stock traded under the symbol TBMC on the NASDAQ and rights traded as TBMC are also on NASDAQ. Now, a key detail here is that the company identifies as an emerging growth company. This means they can take advantage of certain regulatory flexibilities, which can be pretty valuable when you're trying to get a deal done. The first major item we need to unpack is an amendment to their core governing document, their amended and restated certificate of incorporation. This is like changing the company S constitution. The stockholders approved this change at that annual meeting on the 29th of September, and it was officially filed with the Delaware Secretary of State on the 30th of September, 2025. So, what did this amendment do? The big news is about extending the termination date. This is the deadline by which the company must complete a business combination or merger. If they don't, they often have to dissolve and return the money to their investors. This amendment gives them more breathing room. It allows the board of directors, without needing another shareholder vote each time, to extend this termination date bit by bit, month by month. What was originally set, likely around the 30th of September 2025, can now be pushed all the way to the 30th of March 2026. This is a crucial flexibility for a SPAC, as finding and closing a merger can take time and negotiations can get tricky. It effectively buys them more time to find the right deal. This section gives us the details of what exactly was voted on and the results. The meeting on the 29th of September 2025 was attended in person or by proxy by a good chunk of shareholders, about 72.75% of the 449,016 shares eligible to vote. That is a healthy turnout suggesting shareholder engagement. The first proposal, the extension amendment proposal, directly relates to that change in the certificate of incorporation we just talked about. Shareholders voted to approve allowing the company to extend its business combination deadline, moving it piece by piece from the 30th of September 2025 ultimately up to the 30th of March 2026. And the vote itself, it was overwhelmingly in favor. 3,270,066 shares voted for this extension. Only 2,856 voted against it, and there were 0 abstentions or broken non-votes. This shows a strong mandate from the shareholders to give the management team more time to execute their strategy. It signals confidence, or at least a willingness to wait for them to find a suitable merger target. Next up is the Trust Amendment Proposal. This is about amending the company's investment management trust agreement. This agreement is the bedrock for how the SPAC's funds are managed and protected in the trust account, waiting for a business combination. Similar to the previous vote, this amendment also directly facilitates extending the deadline for the business combination. It specifically allows for up to 6 additional one-month extensions, pushing the ultimate deadline to the 30th of March 2026. Again, the vote was decisive. 3,270,065 shares voted for this trust amendment. Just 2,857 voted against it, with no abstentions or broken non-votes. This confirms the shareholders' clear desire to provide Trailblazer with the time needed to find and close a merger deal. It is a unified front on the key operational necessity for a SPAC. Finally, there is the ratification proposal. This is a bit more routine, but still important for corporate governance. It is about ratifying the appointment of CBCPI's PC as the company S independent auditors for the fiscal year ending the 31st of December 2025. This vote was almost unanimous with 3,272,719 shares voting for approving the auditors. Only 3 shares voted against and there were 200 abstentions. This indicates general agreement on the chosen accounting firm, which is critical for transparent financial reporting. Now, an interesting consequence of these votes, specifically the extension votes, is revealed in the other events section. This means that as shareholders voted to allow the extensions, a significant number of them decided they didn't want to wait for a potential merger. After all, they chose to redeem their shares, effectively getting their initial investment back. That is 2046800 shares, which is a substantial portion given the total voting shares. While the company got its extension, it also means a lot of capital has been returned to investors, reducing the amount available for the eventual acquisition. This is a common trade-off for SPACs. When they extend deadlines, gaining time often comes at the cost of some capital. This section lists the exhibits filed with the report. Exhibit 3.1 is the actual charter amendment, the legal document solidifying the extension. Exhibit 10.1 is the amendment to the Investment Management Trust Agreement, also formalizing the extended timeline. And finally, we have the signatures, dated the 3rd of October 2025. Ari Rabinowitz, the Chief Executive Officer of Trailblazer Merger Corporation, has signed off on this report, attesting to its accuracy. Looking at Trailblazer Merger Corporation, recent filing, it paints a clear picture of a SPAC actively managing its life cycle. The overwhelming shareholder approval for extending the business combination deadline is a strong sign that, for now, investors are willing to give management more time. This is crucial for the company's survival. Without that extension, they might have faced dissolution. However, the significant number of redemptions, 2046800 shares to be exact, is a point of concern. It means a considerable amount of capital that was raised at the IPO is being returned to shareholders. This reduces the war chest available for the acquisition, potentially limiting their options or the size of the company they can acquire. The company's direction is clear: to find and complete a merger. Their strength lies in the shareholder support they garnered for this extension, demonstrating trust in their ability to navigate negotiations. The primary weakness, or rather the significant risk, is the dwindling capital due to redemptions. This puts more pressure on management to find a compelling deal swiftly, as they have less financial firepower than they started with. The opportunity here is that with more time, they might find a better, more strategic target. The risk is that in their haste, they might overpay or choose a less than ideal partner. Ultimately, whether this extension is a strategic win or a temporary reprieve hinges entirely on their ability to secure a robust business combination before the 30th of March 2026, and do so without further depleting their resources. Alright, that is our breakdown of Trailblazer Merger Corporation, latest filing. What is your take on these extension maneuvers and the impact of those redemptions? Do you think they'll find a deal, or is this just delaying the inevitable? Drop your thoughts in the comments below. If this analysis was valuable, hitting that like button really helps us out, and subscribe for more deep dives into the financial world. And don't forget to check out the Discord community linked in the description for more real time discussions. Thanks for watching. See you next time.